This is Matt Bennett, grain marketing consultant with Channel, here with a market rundown. We're going to talk about the June 30th USDA planted acreage and quarterly stocks report. I'm going to talk to you about three of my main takeaways. First of all, corn acreage was lower than what we thought. Bean acreage was lower than what we thought, and then stocks were about as expected, which they were expected to be lower. So you get into this report and you think the average trade gas is like 93.8 million acres. You come in here at 92.7, which on a year like this, carryout levels are very tight, both for old crop and new crop corn. You need to have really 93.5, 94 million acres at least with really good yields. And we all know that the weather has not been ideal for everyone. Yes, there's been a lot of rain come through here over the last couple of weeks, especially this past weekend. But long story short, on corn acres, they needed to be more than 92.7. You saw the corn market go from down 15 to 20 cents right before the report to up the limit within about 60 seconds. So definitely a bullish view as far as the trade was concerned. Soybean acres really didn't change, 87.5. The trade was expecting closer to 90 million acres. And so on soybean acreage, especially whenever you look at both old crop and new crop stocks, you are razor thin as far as stocks usage ratios. There's not a lot of beans in the U.S. We know that whether it's old crop or new crop, we're in a very tight situation. So very interesting report as far as the soybean acreage was concerned, and moving forward, by all means, I think that it is going to be a friendly, supportive role, if you will. It may not take us to new highs, but I think that it's going to give us a little bit of an underpinning. You know, whenever you look at quarterly stocks, my team, the guys that I work with and broker with, we thought that we might get under 4 billion bushels of corn. We had about 4.1, but it was a little bit below trade guesses and significantly lower than last year's June 30th stocks of about 5 billion bushels. So we understand that we're much more snug than what we were a year ago. And by all means, that is going to do nothing but support the market moving forward. So again, my three takeaways are that corn acres were big, or were smaller than expected. Bean acres were smaller than expected, you know, and stocks came in just about as expected. So appreciate you tuning in. If you have any questions, you know, you can drop them in the comment section, or you get my contact info as you go through the marketing newsletter that we put out over the weekend. So once again, this has been Matt Bennett, grain marketing consultant with Channel Seed, with your market rundown.